Hi, it's 2025, and this is the year that you wanted to buy a home, but you keep asking yourself, when are mortgage rates going to come down to make this a little bit more affordable? This is a question I ask myself almost every day, as interest rates have remained stubbornly high over the last couple of years. So if we look at how we got here, all you have to do, you go back a few years to the time of the pandemic, at which point we were dealing with some supply chain issues. We also had the government pouring lots of stimulus into the economy, putting money into the economy. All of that created inflation rates that hit 40-year highs at one point. Mortgage rates went up right along with all of that as the Federal Reserve started raising rates in order to combat all the inflation. We actually topped out at about 8% on mortgage rates a couple of years ago. Now, today, we're ranging anywhere from 6.5% to 7%, just depending upon the loan type, your down payment, credit scores, all those sorts of things. But that's a general range, is mid sixes to high sixes. And there's a lot of experts that are projecting fourth quarter of this year, first quarter of 2026, we could see interest rates, high fives, low sixes is the range that we're seeing. And that would be great if that happens. In the meantime, however, there's some opportunity that you can take advantage of right now because sellers are willing to work with buyers, cover some of their closing costs, do some concessions, which allows you to buy down the interest rate, make it a little bit more affordable that way. Because if the rates do come down later this year, that's going to make it where that many more buyers are eligible, that many more buyers are getting out there, increasing the demand while putting pressure on the supply. So these are all things to keep in mind. But what's keeping rates up right now? What's keeping rates up right now is inflation is continuing to get better, but it's still not quite where the Federal Reserve wants. Additionally, there's the tariffs. And whether you believe in them, don't believe in them, doesn't really matter. There is a inflation component that the markets aren't really quite sure how it's going to impact. In other words, is this going to be a really big hit to inflation? Is it just going to be one time, which it should be based on historically, that's what happens when you're applying tariffs. It's a one-time hit. But that all being said, there's just this uncertainty, which is causing the Federal Reserve not to move. And then lastly, we have a national deficit, which continues to grow. So as I mentioned before, the Federal Reserve, they have a direct impact on short-term rates, and they have an indirect impact on long-term rates. Mortgages would obviously be a long-term rate. They're tied more to long-term treasury bonds. You're going to see more of a correlation there. So this deficit that continues to grow, that's actually having an impact on long-term rates by pushing those yields up because the government has to sell more and more bonds in order to service the debt. And as that debt climbs, it just means we're going to have to sell even more. So hopefully we can get that in check. And then if inflation continues to come down, then the Federal Reserve will be able to start easing short-term rates, which again will have more of an indirect impact on long-term, but those will come down as well because again, they both don't like the same thing, which is inflation. So it's getting inflation in check, getting our deficit in check. Those are the things that are going to help bring down long-term rates. In the meantime, like I said, take advantage of the fact that sellers are willing to work with you, cover closing costs, because we can then use that money to buy your rate down, get you into a lower rate, lower payment that way, where you're not having a lot of competition and you've got a workable sell. So listen, I hope you found this information helpful. If you did, please do me a favor and subscribe to the page. If you would like to forward this to anyone you know, please do. And if you have any questions about mortgages, about interest rates, feel free to call me, text me. I'm always here to answer your questions. Have a great day. We'll talk to you soon. Bye-bye.